10 years ago, a company was worth $10 billion. Most people had never heard of it. Today, it is worth 1.77 trillion. It launches rockets. It runs a global internet network from space. It just raised $75 billion in a single day, the largest amount ever raised in a public market debut. In the entire history of finance, and for the first time in 24 years, you can actually buy a piece of it. The question is, should you? Let's start with just how big this actually is. SpaceX priced its IPO at $135 per share, raising $75 billion in one day. That is the largest initial public offering in the history of financial markets ever. The previous record was held by Saudi Aramco, which raised $35 billion in 2019. SpaceX didn't just beat that record, it doubled it. At $135 per share, SpaceX entered the public market at a valuation of $1.77 trillion. That makes it larger than Tesla on day one, larger than Visa, larger than JP Morgan Chase. SpaceX is now worth more than the entire GDP of Canada. And here is what makes this different from every other IPO in history. SpaceX set aside 30% of its public shares for everyday retail investors. Not 5% like most IPOs, not 10%. 30. That means for the first time in 24 years, ordinary people could actually buy in. But before we answer whether you should buy it, you need to understand what you are actually buying, because most people think SpaceX is a rocket company, and here is where the story gets interesting. SpaceX has 3 business segments, and only one of them is making serious money right now. The first is space, the Falcon 9 launches, the NASA contracts, the Starship development. This is the exciting stuff, the stuff people watch on YouTube. But it is not where the money comes from. The second is connectivity. This is Starlink, the satellite internet service that now has over 10.3 million subscribers worldwide, up from just 4.5 million at the start of 2025. Starlink generated $11.4 billion in revenue in 2025, with a 63% profit margin. For every dollar Starlink makes, it keeps 63 cents as profit. That is extraordinary. The third is AI, specifically XAI, which includes Grok, the X platform, and data center development. And this segment is bleeding money. XAI posted a $6.36 billion operating loss in 2025. So here is what you are actually buying when you buy SPCX, a satellite internet company with extraordinary profit margins, attached to a rocket business that is exciting but not profitable, attached to an AI division that is losing billions. That is the real company behind the hype. So why would anyone buy it? Here is the bull case, and it is genuinely strong. Starlink is growing at a pace that is almost hard to believe. 10 million subscribers today. Analysts project 50 million by 2030. At current revenue per user, that is a business worth hundreds of billions on its own, before you even count rockets or AI. The Falcon 9 is the most reliable and cost-efficient launch vehicle ever built. SpaceX recently flew a single booster on its 35th mission. No other rocket company on Earth comes close to that reusability. Every reuse cuts launch costs. Lower costs mean more contracts. More contracts mean more revenue. Starship, the massive next-generation rocket, is still in development, but if it works at scale, it fundamentally changes the economics of getting anything into orbit. SpaceX owns that vehicle. Nobody else does. And then there is the index fund effect. MSC. I announced that SPCX would be eligible for early inclusion starting June 13th, the day after listing. That means every index fund and ETF tracking the nasdaq 100 is now structurally forced to buy SPCX. Automatic buying pressure. That has nothing to do with whether the stock is fairly priced or not. Now here is the other side, and you need to hear this before you make any decisions. The valuation is extreme, $1.77 trillion. At that price, you are paying 94 times annual sales. For comparison, Tesla trades at around 8 times sales, Apple around 9 times. SpaceX is priced like it has already won every market it will ever compete in, and the company as a whole is not profitable. Starlink makes money, but the rocket division and the AI division are both burning cash. You are buying a loss-making company at a valuation of nearly $2 trillion. History is brutal on this point. The average IPO from 2012 to 2021 gained 23% on its first day. Morningstar called SpaceX significantly overvalued at the offering price. That is not a fringe view, that is serious financial analysis. And there is one more risk nobody talks about enough. Elon Musk controls 85% of the voting power. He decides what happens to your money, how much goes toward colonizing Mars, how much goes toward XAI. You as a shareholder have almost zero say in any of it. Now here is what most financial channels will not tell you. This affects you even if you never buy a single share of SPCX, when $75 billion flows into one new stock. That money has to come from somewhere. That selling pressure hits the entire market. The nasdaq has already lost more than 7% since hitting its all-time high on June 1st. The market was already wobbling.
The SpaceX IPO, along with the upcoming OpenAI and Anthropic listings, adds more volatility to an already unstable market. So, the question you actually came here for, should you buy SPCX? Here is the honest answer. If you missed the IPO allocation at $135, buying on the open market means you are already paying a premium. History says that premium rarely pays off in the long run. If you want exposure to SpaceX's growth, the smarter play for most people is buying a broad index fund that will automatically hold SPCX as it becomes a larger part of the nasdaq. You get the exposure without the single stock risk. If you genuinely believe in the 10-year vision and you are comfortable riding massive volatility, a small speculative position as part of a diversified portfolio is a reasonable bet. Small, speculative, not your savings. But if you are thinking about putting serious money into SPCX because it feels exciting and everyone is talking about it, that is exactly the kind of decision that costs ordinary people money. The hype around an IPO is designed to make you feel like you are missing out. That feeling is the product, not the stock. Here is what I want you to walk away with. SpaceX going public is genuinely historic. The largest IPO ever, a company that changed aerospace forever, a founder who said no to Wall Street for 24 years and finally said yes. But whether SpaceX is an incredible company is a completely separate question from whether SPCX is a good investment at this price. Great companies can be terrible investments if you buy them at the wrong price, and $1.77 trillion is a very high price. The people who made real money on this IPO were the institutional investors and the retail investors who got allocations at $135 before trading began. Everyone buying on the open market is buying someone else's exit. That is not pessimism. That is just how IPOs work. The economy is full of moments like this. Moments that feel like opportunities but are actually transfer mechanisms. Money moving from excited buyers to informed sellers. Understanding that mechanism, understanding it before you act, is how you keep your money working for you instead of for someone else, and now you understand it. This is what broke economy does. Every time the financial world creates a moment of mass excitement, we show up and explain what is actually happening underneath it. If this video gave you a clearer picture before you make any decisions about SPCX, subscribe. Because OpenAI and Anthropic are coming next, and you are going to want to understand those too.